Hello everyone and welcome to the channel. Today we're going to talk about a topic that's generating a lot of buzz and controversy in the world of crypto. Get ready because we're going to break down everything you need to know about the World Liberty Financial WLF token, a project directly linked to the Trump family. This video is not financial advice, it's an analysis so you can form your own opinion. Let's get into it. What is World Liberty Financial? Imagine a decentralized bank, but with a brand you're already very familiar with. That is, in essence, World Liberty Financial. It's not a meme coin or an anonymous project, but a decentralized finance platform publicly backed by the Trump family. Its stated mission, and I quote, is to put the power of finance back in the hands of the people and to make crypto and America great again. The project is based on the Aave v3 protocol, one of the largest and most reliable in the DeFi space, which gives it a solid technical foundation. However, it's not an open source and permissionless project like Aave. World Liberty Financial has integrated Know Your Customer (KYC) verification to comply with U.S. regulations, making it a permissioned DeFi ecosystem. Its main product is the WLFI token, which, according to the company, is the crypto equivalent of an initial public offering or IPO. Unlike other cryptocurrencies, the WLFI token has a very specific function. And this is where things get interesting. The purpose of the WLFI token: governance, not speculation. When you buy tokens like Bitcoin or Ethereum, you do so to hold an asset you can exchange, use in transactions, or sell for a profit. The WLFI token is different. Its primary utility is governance. This means that by acquiring WLFI tokens, you get the right to vote on the strategic decisions of the platform, what new features will be implemented, how funds will be managed, and other key aspects of the ecosystem. In theory, this gives the community the power to shape its future. However, there's a crucial detail you need to know. WLFI tokens are not transferable. This means that once you buy them, you cannot sell them, send them to another wallet, or trade them on a secondary market. They're designed for holders to focus on governance, not speculation, which significantly limits their liquidity and financial flexibility. Pros and cons: a balanced analysis. Pros: regulatory foundation. The connection to the Trump family and the focus on regulatory compliance can attract investors who have traditionally avoided the crypto market due to a lack of legal clarity. By requiring KYC, it positions itself as a safer option for institutional capital that values transparency and a legal framework. Strong narrative. The Trump brand gives the project massive visibility and a loyal follower base. This can generate media interest and adoption that other crypto projects, without such strong backing, might not achieve. Governance model. In theory, the token offers a form of community participation in the platform's decisions, empowering holders to influence its future direction. Solid technical base. By being built on Aave v3, the protocol inherits the security and stability of one of the most tested and audited DeFi ecosystems on the market. Cons. Lack of transparency. The project's documentation, its gold paper, has been criticized for lacking complete technical details. There has also been scrutiny over the distribution of tokens and the control that the founders and their affiliates maintain over a significant portion of the revenue. Centralized model. Despite calling itself a decentralized finance protocol, the fact that a single entity, a corporation controlled by the Trump family, holds such significant power, and that the tokens are non-transferable, raises serious questions about its true decentralization. Risk of conflict of interest. It has been reported that a Trump family-controlled entity keeps up to 75% of the revenue from token sales, which some experts see as a conflict of interest, prioritizing personal profit over the development of the ecosystem.
lack of liquidity. The fact that you can't sell the token once you buy it is, without a doubt, its biggest drawback. This means it is not a speculative asset in the traditional sense. Your investment is locked in unless the governance rules change in the future. The trend and the future. The trend of the WLFI token is difficult to predict, precisely because of its non-transferable nature and its reliance on the brand. We can't talk about a price trend as such in a free market, but we can talk about its potential for adoption. The future of the project will depend on its ability to attract a user base that values participation and access to a regulated financial ecosystem more than liquidity. If it manages to build a robust community that uses its lending and services platform, it could gain ground. However, its governance model, which has been called symbolic by some, could be its biggest long-term obstacle. The listing on exchanges like Binance, albeit with high-risk warnings, gives it visibility. But if there isn't a clear way for retail investors to make a profit, its appeal could be limited to a loyal follower base and accredited investors. In conclusion, World Liberty Financial is a fascinating experiment that combines a powerful political brand with decentralized finance technology. It's not an asset for everyone, and its future success will depend on whether it can overcome its criticisms about its centralization and lack of transparency. As always, if you decide to explore this space, do your own research. Thanks for coming here. If you like the video content, check out our videos.